One of the things I think I deal with a lot with business owners, and curious your perspective, is always the balance between, like, you know, you're building a very efficient tax strategy to try to get your tax return to kind of be the lowest taxable number within reason as possible. But then on the other hand, when it comes to like growing and needing to work with banks to finance, acquisitions, to finance equipment, to finance real estate, whatever it is, well, that kind of bites you in the butt a little bit. So, like, how do you think about that with like your business owner, individual clients?
It's part of the planning process, actually. Like if we know that we have a growing business and we have like someone that's like very um, equipment intense, hopefully have a plan for that. To be like, okay, like what are our criteria for the bank? Who's requesting? Who's requesting what? A lot of times there will be covenants that we need to meet, so we know kind of what that game plan is to be like, okay, well, we can do this year, but we can't do this. So we kind of marry those two between what's required of the bank, what you want to do in the future, as well as what the taxes, tax situation is. And I think I've told you this too. I always say, don't let the tax tail wag the dog. Everybody is all about like, I don't want to pay tax, I don't want to pay tax, I don't want to pay tax. There is no 100% tax bracket. So, think about it. If I said to you, hey, Nick, I'll give you $1 if you give me 35 cents back, you're going to do it? Of course, you're going to do it all day long.